Hi, welcome to my channel. Today, we will talk about the basic structure of BBMA OA. After we are talking about how we set up the indicator that we need from previous video, if you are not watched it already, I put the link in the description box below. So, in this video, we are talking about the basic structure. What is the basic structure of BPMR OA? The first structure is extreme. You can see here in Australia Japan yen chart time frame 4 hours, we see clear structure of basic BBMA OA. Here we see the extreme, and then the price make the TP wajib structure. TP is take profit, wajib is it is not English, it is a Malaysian language that means fixed, so we can say it is TP fixed also. And then the price move and make the next structure, it is MHV. What is MHV? MHV is market hilang volume. Again, it is a Malaysian language. That means the market mean it is price, the movement of market. Hilang mean is loss, and V for volume. That means the market losing the volume. It is called MHV. After the market make an MHV, the market next move making a CSAK. What is a CSAK now? So the CS mean candlestick. Candlestick, here we use a candlestick chart. So the CS mean candlestick. Arah mean what is forget. Give me a second. Arah meaning in English, I do forget how to say it. Oh, it is a direction. Arah mean direction. So sometimes market make a structure only CSA. That means candlestick direction. Sometimes market make a CSAK. So what is K in here? K is kukuh. Kukuh is a Malaysian language. It means we can say it is fixed also. So it is a candlestick direction, fixed direction. We can say it like that also. So it is this is a CSAK. And then the market make a re-entry structure. After re-entry structure, the market make a momentum structure. What is mean by this all basic structure I will explain one by one in my every next video. This is the full basic structure of BBMA OA from 20 to 24. The price move in 100% structure of BBMA OA. It is a very beautiful one. Okay. Now I will tell you in a few next video, including this one, I will explain how to read and notice the basic structure one by one, and also where basically people open and close position on every structure. But I need to tell you, there are no perfect system that can 100% right. Also remember, this business is high risk and low return. Here I am not tell you how to trade to make money. I only share how basically people read chart using method called BBMR OA. Okay, let's jump into the first structure. The first structure is extreme. What is extreme characteristic? First, the candle close out of upper or lower Bollinger Band. So in this one, we can see it is clear. The candle is closing out of the lower Bollinger Band. This one also close out of the lower Bollinger Band. So this is the first characteristic of the extreme. And then the second one is the moving average. The low moving average is moving average, I mean is moving average low or high. So this one and this one for low moving average, low MR, it is move out of upper or lower Bollinger Band. So in this downtrend, we can see it is clear. After candlestick close out of lower Bollinger Band, then MR low also follow move out of the lower Bollinger Band. This is the second characteristic. And then the next one is we see the rejection. This downtrend is the bear candle. We can see it's really clear bear, strong one, and then it's continue making a bear candle, and now this candle we call it the rejection candle. Why is called the rejection candle? Because we see this candle open in here, and then he moved down until here. After that, rejection come, and the price of this candle moving up again, and then close in here. But if this candle close in here, it is nearly the lower price of this candle, then this is not the rejection candle. So this is the rejection candle. After the rejection candle, it is already confirmed. This is the extreme structure. So the first one, candle closing out of Bollinger Band. The second one is the MR is moved out of Bollinger Band, and the third one is the rejection come. It is already extreme structure. What people doing when found this structure? It is basically two kind of people will be found in this timing. The first one, people only see and do nothing because of what? Because extreme signal, we can call it signal. Extreme signal is very high risk signal. And the second kind of people is looking for buying in this structure, because extreme signal mean the price is probably going to move other direction in this trending down, meaning extreme can change direction to the uptrend. So the second kind of people will looking for the buy opportunity in the extreme structure. Where is the people will open buying position in this extreme structure? It is in the retest characteristic. What meaning by retest characteristic? This candle is do retest give me a second. Okay, this candle is retest. The price, why this calling retest candle? Because after the rejection candle in here, people will marking this position like this, because the next candle probably is the retest candle. People will open position in this box, I mean here, from the previous body candle down to the lowest price of previous candle. So in here until here. That's why this candle is called retest candle. People will open buying position here. Before we open position, we need to know where we need to out of position with loss and with profit. So in here we already know where the open position place, and now the cut loss position is lower than this lowest price rejection candle, so it can be in here or here. Because why? Because if the next price after the rejection is continue down until here and closing in here, that means this extreme can be fair and the price can be a down momentum and go down future. That's why the cut loss or stop loss in this area. Okay, the next thing is where we need to cut profit. It is in the TP fixed place. Where is the TP fixed place? The first one is in high moving average in this example, because this example is the extreme low. The price is going up after extreme, so the target or TP fix is in MA high, the first target, and the second target is in the middle Bollinger Band. So in here or in here, people is cut profit, because so many times after extreme structure the price will change direction until the different moving average or the middle Bollinger Band. So now we understand the extreme structure already and the TP fix already. Now I will give another example of extreme. Let's using live chart. Also in this Australia-Japan chart for hour, we also see the extreme structure here. Why this is called extreme structure? Remember, the first characteristic is the candlestick is closing out of upper or lower Bollinger Band. In this case, this candle is closing out of upper Bollinger Band. And then the second characteristic is the moving average moving out of upper Bollinger Band also. We can see it's clear here. The high moving average is already out of upper Bollinger Band. And the third characteristic is there are a rejection. So this is already the second characteristic. And then this is the third characteristic. So this is already the conform extreme structure. In this rejection, it is nearly closing in the Bollinger Band. If the rejection closing again inside the Bollinger Band, it is the better one. But in the next candle, we can see it is clear playing inside the Bollinger Band. And then the next candle making a retest candle. Remember, this is the retest area. So people is sell position in here. Before selling, we need to know where the cut loss position, and we already know it is in here. And the target selling is the first one is in low MR in here, and the second one in the middle Bollinger Band in here. So this is our second example of extreme. Now we are looking for the next sample. Okay, this is a good example. Look at this extreme structure. First, the candle closed out of the upper Bollinger Band. And the second character is moving average is moved out of Bollinger Band. And the third characteristic is the candlestick is making a rejection pattern. Then this is the selling area. After people open selling position in here, remember we need to make a cut loss or stop loss area in here. After the position is losing in this time or in this candle, we can make it here, and this candle make the position is lost. This after the position is losing, the price is continued up future, making a momentum. So this is a good example, the losing position. Okay, we are looking for another example. In here, the MR is out of Bollinger Band. This is the second characteristic, but there are no first characteristic. There are no candlestick closing out of upper Bollinger Band. So this is not an extreme or not a good one. We can skip it. Okay, this in here. The first characteristic is the candle close out of upper Bollinger Band. Second, the moving average moving out of upper Bollinger Band. The second one is there are the rejection candlestick that move down very strong, closing in the inside the Bollinger Band. But there are no retest candle. This is a good extreme, but just not making opportunity to making selling position. But it is already making a TP fix area in here and here. Okay, let's move to the next extreme. Alright, this is it. First, the candlestick moving out of upper Bollinger Band. Second, the moving average move out of upper Bollinger Band. The third characteristic is there are a rejection candlestick, but not a good one. Why? First, in this uptrend, this rejection candle is also the bull candle. It is not a bear candle. A good characteristic is when the first character is a bull candle, the rejection is bear candle and closing inside the Bollinger Band. So this is extreme but not a good one to follow or open position. If you are still want to open in the area, This is the open position area, and this is the stop loss area. So you are not lost so much from here and then here, not losing so much. This is extreme but not a good one. We are looking for the next one. This is not, candle is not closing down from lower Bollinger Band. The moving average just nearly out but not. This is not, because it is only have the first characteristic. The candlestick is closing out of upper Bollinger Band, but there are no second characteristic. MR is not moving out of upper Bollinger Band, so this is not an extreme. And next, this is it. Candlestick is out of upper Bollinger Band. Moving average is also, and then there are a rejection, but there are no opportunity. Again, there are no retest candle here, but the price is hitting the target. TP fix is here and here, but no retest candle here. Okay, next, this is not, there are no first characteristic. Then this is it. Yes, this is it. The candle closing out of lower Bollinger Band. The MR is moving out of lower Bollinger Band. There are rejection candles, good rejection, because it is closing inside the Bollinger Band, but again there is no retest candle, but the price already hit the take profit area. This is this here and here is TP fix. Okay, let's move again. This is again, there are no retest candle. So what we do, if there are no place for our open position, what we do is next looking for another one. You can see in other price chart, other pair, and other time frame. Let's try another pair, Euro USD, and we trying another time frame. It is just the same. Let me show you. Is this extreme? This, I think yes, because the candle, this candle is closing out of lower Bollinger Band. This is also, and this candle is rejection. It is a good rejection because it's closing inside the Bollinger Band. The moving average out of lower Bollinger Band. Then this candle is retest candle. People open position in here. The first target is already hit yesterday in here. upper, I mean high moving average, the first target is already hit. The second target, maybe one day. So let's looking for the another example, for extreme example. This it? Yes. First, the candle closing out of lower Bollinger Band. It is start from here. This is the first candle closing out of lower candlestick. This is a gaping candle. Let's pass it. Let's see, this is one is closing out of lower Bollinger Band. And then second characteristic is the moving average is moved out of lower Bollinger Band, and then we waiting for the third characteristic, and it is in here. The third characteristic is rejection from the bear candle. Actually, this is already the rejection candle, but it is not good one because it is also the bear candle and is not closing inside the Bollinger Band. And then this is the bear candle again. If we are open position in here, we are cut loss in here. If you are making the position in here, and then the candle, this is also bear, this is also bear candle, and then bull candle coming. That means this is the rejection candle, the good one, because it is a closing inside the Bollinger Band, closing here. And then this is a little retest, people open buying in here. After that, the price is going up, hitting the take profit 1 and take profit 2. They pay fixed. The stop loss is in here, taking profit here. Okay, let's see the last extreme example. This is maybe this is maybe down, rejection, take profit. Okay, this is the last example. Candlestick closing out of upper Bollinger Band. The first rejection, the second rejection, the good rejection, and then the retest candle, and then hitting the take profit, fixed take profit. All right. I need to end this video because it is long already. So in the next video, I will explain the MHV structure. So you need to like and subscribe this channel because I know people is want to see my next video. Okay, see you. Bye bye.